Greetings, members one and all of the Salivation Nation. Another crazy day in the markets as gold ends up 3% higher as the Fed announces a surprise half-a-point interest rate cut. Let's explore. That's right. Gold moves up even as a U.S. stock market strengthens, is part of the sub-headline of the story from MarketWatch here. But the markets were actually down today, and gold was up even in spite of the rate cut here. Gold futures rallied on Tuesday, with the Haven Metal posting its biggest daily percentage rise since June, as the Federal Reserve announced a surprise cut to interest rates, citing the risk to the economy from this epidemic that we've been having to censor ourselves in mentioning. In a statement, the Fed said it had decided to cut its benchmark federal funds rate by a half point to a range of 1% to 1.25%. While the economic fundamentals are strong, a rate cut was necessary in light of the risk to economic activity from this particular ailment that's been spreading around. Gold's uptrend has been helped by the Fed rate cut today and global economic pullback, with the political headlines coming in from Super Tuesday, or as some call it, Super Thursday. Haven buyers are now adding to positions in the precious metal. George Garrow, managing director at WBC Wealth Management, told MarketWatch, gold tends to attract buyers in a low interest rate climate. And yes, and that is kind of where we're at. But some people say when the Fed does cut rates, then that means it's going to essentially mean there's going to be other economic activity, which means that gold prices would go down. And that's what we've seen in the past. We've seen gold prices actually go down each time there's a rate cut. But because that means that, there's more low interest loans out there, and that could possibly cash that could be punched in or used for various different things to grow businesses and what have you. April gold was up 2.82% on COMEX, picked up $49.60 or 3.1% to settle at $16.44.40 an ounce. We'll look at those numbers more closely here in a moment. The largest one-day percentage rise since June 20th of 2019, according to the Dow Jones market data. Prices gained 1.8% on Monday after falling by nearly 5% on Friday. The biggest one-day percentage loss since the week ended June 20th, 2013. So that's a pretty big hit on Friday, and we're starting to make recoveries of those here today. And my guess is probably the metals will probably continue to go up tomorrow. We'll see. May silver was up 2.66%. Meanwhile, rose 44.9 cents or 2.7% at $17.18 an ounce, falling 1.7% advance in the previous session. Bullion bulls say that gold has enjoyed a bounce so far this week because it was oversold last week, as the market reaction to news of the spread of this particular ailment was originated in China in December, produced frenetic swings in asset prices, an unusual spate of selling in precious metals as investors sought to raise cash. Again, I will say that we got to be cautious about what is out there in the news and the hype around it. This is obviously a bad thing, but the flu in general is a bad thing. The flu that we're seeing now, and some say that it's really a continuation of the 1918 Spanish flu. And so more deaths from that, at least here in the United States. Obviously, this particular one has not made its way circulated through quite to the levels. They're being very cautious and careful about it. But if you look at the statistics, there's a lot more recovered. In fact, there's really about 50,000 cases now on average of active cases now, which is down from before. But nonetheless, it's still a concern, and people are being very cautious. But we don't want to panic. But the markets typically don't listen to reason in many cases because of the hype there. But we'll see. The safe haven metals are also getting a bid after the group of 7 finance ministers released a statement that offered no specifics on dealing with this, said Jim Wyckoff, who is a senior analyst at Kitco.com, in a Tuesday research report. Still, finance ministers and central bankers from the group of the 7 world's largest advanced economies said they stood ready to act to address it, suggesting a willingness to use fiscal and monetary policy measures. So you're seeing it here, and obviously the Fed is reacting. They announced Tuesday U.S. stocks surged, but then dropped back, with the Dow Jones Industrial Average losing more than 600 points as gold futures settled. On Monday, the index booked its best daily percentage gain since 2009. Gold's status as a safe haven asset remains unchecked, said Ryan Giannotto, Director of Research of Granite Shares, which offers the Granite Shares Gold Trust, adding 3.49%, adding that gold has climbed year to date despite Friday's big retreat. And that's just it. Gold, and I think even silver, is reacting as well. I believe its rise here today is an account of it's seen as a safe haven along with gold. Even though it is a monetary metal, or even though it is an industrial metal, it still holds properties. Keep in mind that you look at that percentage, about 55% of silver is used in industry. It has a duality role. It also is still, in times like, especially I believe that today's movement of the price upwards is because it is demonstrating its role as a store of value as well, even though it is more volatile than silver, or more volatile than gold, rather. The Fed's emergency cut only underscores this point, said Giannotto. When market turmoil is so pervasive that the tumult extends to even gold itself, these are the moments when gold may be needed most. Today's emergency cut emphasizes this point, with gold rallying 17.5% over 12 months over the previous rate cut during the crisis. Copper is down a bit, and so copper is separating itself from silver in this way, even though copper is seen mostly as an industrial metal. But even copper, by the way, even copper has monetary aspects to it. In fact, make no mistake, copper is money and is being used as money to this day in many countries around the world, including the United States. Every time you pull out that quarter, that's mostly copper. That's right. April was up 0.209%, added about 1.29 to $869.30 an ounce. I think it's talking about platinum there, PLJ20. And palladium was down 1.92%. Let's take a look at the precious metals here, prices. These are the prices from Kitco. We can see gold is up $51, the big winner of the day. And but silver, on a percentage-wise, isn't terribly far behind gold in this case. And platinum is even up $16, whereas palladium has taken another hit, negative 1.24%, down $30 to $2,500, comfortably below the $2,600 level. And rhodium is below $12,000 now. Looks like I missed the boat on that one, didn't I, to sell it? But its bid price is still above $10,000. Its ask price is $11,400. And so there you have it. So interesting to see these metals make the moves that they are. And you remember I did post a video a while ago called The Calm After the Storm. And we are in a storm, a black or gray swan, however you want to look at this event going on, that will soon subside. Make no mistake, this is going to go away. What's going to happen with gold and silver then? That is the thing to look out for when all the dust settles. Where will the markets be? We've already seen gold make its way upward and make that huge move over the past year. This is a continuation of it. I do believe these price movements are primarily because of what we're seeing in reaction to this ailment. But there's other things to consider too that have affected the price of gold going upwards before that may or may not come into play after this is done. And another thing, and politically, there we may be seeing some of this price action occur too, as today is Super Tuesday. We very well could have a Democrat nominee apparent after this is over. Some are speculating that it may be Bernie Sanders. If that is the case, then I believe these markets will be reacting, and these numbers may be baking that in because of the massive radical difference in programs, in social programs and socialism being implemented, or the potential thereof, if he were to actually become president. But even as a nominee, I think if Bernie Sanders becomes a nominee, that's going to spook the markets in a way, in a sense, maybe as much, in many cases, some cases, I mean, maybe even more so than this particular ailment. But we'll see. We'll see how it all plays out. But there you have it. There's the news and analysis for the precious metal prices today. Post your thoughts below. Be very interested to see what you think about where the metals are and where they could possibly go. I've made predictions in the past, mainly for fun. I've got no skin in the game, and but I've been wrong before, been wrong again. I've been right before, but I don't hold much stock in my predictions. But it's fun to talk about, and it is interesting to keep up with. But in the end, we hold these precious metals to be self-evident. They are what they are. They do what they do. They sell themselves, and we hold on to them. And for the long term, because in the long term, they will preserve your wealth through a period of time as you accumulate them, much more so than cash or any other low-risk asset, I would say. And so there you have it. So post your thoughts below. I'd like to extend a multitude of gratitude to you all for watching and encourage you to please rate, share, comment, and subscribe.